right? We now have an inverse play, which we see got held up pretty nicely. We didn't actually even end up trading back down to this SNDR at all. But we had this 5-minute sweep in here, and what ended up happening was we came down, we had our second movement here, this validated, and we started scooping in longs. Now the fallacy that I had was that I was longing based off of failure, and then I added on this failure underneath this candle, thinking that that was the last bit of liquidity. And foolishly, I put my stop right underneath, which ended up taking me out for 2 ticks. And this blasted up. Now, a couple of different things with this. Number one is the error that I made, that I would implore on you guys not to make. This volatility can be very, very easy to make mistakes like this. If we're long here, let's say we're long, I don't know, underneath this low, and you got your long here. Whereabouts should our stop be for invalidation? Should be underneath this. That's right, underneath that low at 95. Or I don't take the trade. And if that risk, which it was 20 points, which would have actually been down here on my initial trade, the fact that this was coiling and I was expecting higher, I got my last sweep and I added in here. And then I put my stop underneath because I took on more risks than I was willing to have down that low. That is very poor trade management, and I would implore on you guys to not have that going forward. Right? So we have this here. Oops, definitely not like that. And to nobody's surprise, if this is going to go up, it should respect the Wombo area, and it certainly did. Obviously, getting that extra couple of ticks meant I walked for this morning because the execution was not there. And aside from this, I think that our ability to read price, especially this morning, was nearly flawless. This trade alone, which definitely I think affected me more than it should have, right? Having a 300-point banger. Obviously, delighted that I think the majority of you guys caught that live this morning, which is excellent, right? Me personally being the person that I am, the trader that I am, missing that when I should be taking that all the time. Very, very, very frustrating. And maybe that did affect me. It'll be on something. Anyways, I was back testing today as a result of it. I actually didn't take... I took one trade when we were home, and that was it. I actually decided to be studying on my own today as a result. But emotions aside, we've got the Wombo here. We're now leading up. Where's our objective? Do we have a 15-minute sweep? No. Is this a credible high, or is this a retracement? Our expectation's the new high. It wasn't quite ready yet, but this is still our objective. Whether it trades down to our SNDR, whether it actually trades down into our manipulation leg, either way, we're expecting higher prices. As a result, not only did we get this Wombo combo, but you'll notice we actually got, not like that, we got our second one as well. Violent stab into the area, what? Responsible. Right? Valid swing as well. Many things to like about going long in here. Many things to like about it. Right? Leading to yet another move, and then what ends up happening? Violent movement. Yes, violent movement here. Little bit of a reversal that came in. Violent, but then what ends up happening is we end up failing here. Right? So if you're long on this, let's say you're long off of the Wombo in here again, it takes the 23.6, so happy days, right? This is our third wombo combo long in this. All of which would have been a minimum of 20 points. So even if you miss this entire run-up, assuming you got out unscathed, which I did not, you've got multiple opportunities with a clear objective to be hit. All that, and you might have even held for this valid swing that we looked at it at the open anyways. We were expecting yesterday to hit it. It did not. No surprise to anybody that we got held up significantly in there when we finally made it up there. Now, this area, major failure, but then comes back down, right? So in the area where we broke order flow, we then traded back in and could not resume the bullish trend. You can have a pretty good idea off of this candle's close. This is not what we want to see. Now we have this, which has now, failed to make a new high. So very similar to what we were looking at in this instance, we're now looking at, are we going to break structure here? Internally, we got that low, which it did. You then saw an SMDR form, and we took that low, right? So hopefully everybody avoid going long in here with the understanding of what ended up happening in here. Very dangerous, right? Very dangerous. We want to see this movement gone. We don't essentially want to see, again, what's our second distribution? This is your mitigation, violent movement, right? Now we've got our intermediate time frame. This should be violent. It was. And yet it didn't take the high. It came back in. All very confusing way, perhaps, of understanding that this is now going to take that low. Now this ended up being very nasty. And honestly, let me double check the other time frames before I continue on with this, right? You're leaning very heavily on that failure, right? But in terms of getting involved, this was a very violent movement down which couldn't break. Okay. But I mean, where do you get involved here? Right? Okay, I can understand this. We've got a break in order flow, trades back in. That's pretty nasty. I would be looking at something in here, right? Whatever your stop ends up being. And this in reality, you're looking at this for a trade. We've now failed. That we're expecting this to trade up, maybe come back down and then be gone. And you'll notice that this traded into the area responsible for breaking structure, to nobody's surprise. Right? So we can still analyze price properly, but getting involved is something else entirely. This made a valid high in here, and then the follow through was gross. And I don't really think that, I mean, even if you're long in here, that's a nasty candle to be long on. You'd probably have your stop underneath that, which was dangerously close to being hit. That at 88.25, that low was 87.50. That's 3 ticks. I think it's perfectly valid to expect that that would have gotten swept. It then violently goes out. We don't break here. So, I mean, in hindsight, sure, we're looking at perhaps a wombo from this, which ended up being respected. But in reality, for me, this is very unclear. Other than the failure, which you're leaning very heavily on, this is now mitigated. We're expecting higher from a narrative perspective. This is very dangerous in terms of both ways. And I think a lot of people got chopped around today with that. For me, when we finally had a body closure above it here, now we have a change in personality on that candle. This is now higher time frame delivery, right? This didn't break above here, so we can't consider this the same way, right? And then we ended up having a strong bearish candle here, which unloaded. Strong bearish candle here, down we go. Very, very different PA than this personality trade here. Violent. And as a result, blast off. No valid highs in here at all. None. Which makes for easy scalping, maybe. But in terms of getting involved and holding, dangerous, right? One trade here, perhaps, the inability to put in a valid high there, right? Sideways, on and on. So hopefully, if you guys were involved in that, there was something there. Now, this is where things get interesting, and this is kind of what I really wanted to highlight today on, because I think it would have been perfectly valid. We've got massive consolidation here. We're in rally, base, go. Our expectation in this was what? We've traded up. We failed to put in a valid high here. We now trade into the imbalance, up. And now we've broken order flow. We expect to trade back in and leave. Second distribution, that second move should be how violent? If we're going to trade back into here, it should be how violent, right? So we're looking at this unwind, and we expect this to not only break, but like this should be a cascade down at minimum to here. 481. 40 points. Very, very quickly. Very, very, very quickly. Right? So we've got our tap into our SNDR. Happy days. Okay. We've now broken this low. Cool. You could argue the sweep, yes, but again, we're expecting that second movement to be gone. We're getting held up along the way here. Now, this move, if you guys were watching this, right? You've got your failure, you're trading back into your SNDR, you've got your violent movement. When you see this, let's actually get rid of all of this for a second. When you see this, right? We failed actually to put in a valid high here, okay. But you see we went sideways, we started unloading, and this started to end up being lethargic. This is not really what we want to see, especially when the curtain came and we broke above this high. That was the major signal that we expected this to here, blast off, broken order flow, trades back into the SNDR, gone. And we got this, which broke order flow here. Goodbye. Goodbye. Now, in terms of difficulty of understanding what's going on here when we're expecting structural reasons of trading lower, this is extremely advanced in terms of understanding whereabouts we are in order flow and narrative. Right? Because we want this and we got the opposite. And what happens when we expect A and we get B? It means the opposite is happening. Right? In which case, we're in a higher time frame consolidation and she's not ready to go down yet. And 100 points later, this is very hard to hold on to. It looks easy in hindsight, perhaps, right? Let's say hypothetically you're involved in a buy stop above this candle at 36.75, right? Maybe you're even targeting this and you're asking your spouse or something, knock me out, please. My target's here, just let me either get stopped out, break even, or it's going to hit. Thank you. Right? But after that, you've got this consolidation here above this area of interest. You're seeing major selling pressure that's achieving nothing. It finally gave us a wick, and then we end up closing there. This is go time now. Right? Attempts to trade lower, can't. Attempts to trade lower, can't. It's not the absence of bear bars that gives us our power. It's not the absence, right? It's the response that happens afterwards. And that gives you two things. The first one being it gives you the ability to hold, right? Although that's scary and that's very irrational, which means our brains do what? Our brains go, this is dangerous. This is dangerous. I don't like this. We have the possibility, because this candle was red here at one point, and everybody's going, well, I don't want to give back all my money. And then what ends up happening is you get a cue that you want relief from your position, so you exit. Right? That's what you're craving. So we have to direct our conscious mind in this to go, I have to, if this closes below here and creates a valid high, then I might exit if it comes back up and fails. Otherwise, I'm still hanging on to this. Why? Because my initial idea here was that the higher time frame tipped its hand of something that should not have happened, which means up we go. I don't know what that's going to look like. There's about 25 different ways this could go. This could break order flow, come back into that area responsible for it, rocket. This could create an internal swing here, and then you've got this, which then fails here. You've got a higher time frame move that just ends up going full parabolic. You've got this tight bear bullish channel where you're getting these bear bars, and then what ends up happening? We sweep underneath them and close above. This is monster. This is monster. And then going forward, what other information does this provide? It gives us personality of the trend. Right? You're starting to see a major change in personality here, aren't you? Not only are we sweeping above highs now, coming back in and closing violently. This is the market telling us that we should trade lower. Now we have to determine whereabouts that is. Well, we've got the range here. You've got your areas responsible that we're now drawing wombo combos from. You've got your SNDRs, and you've got the energy of the move. This energy blasted above this high. That's a pretty good low to be risking off of, isn't it? Who could have predicted this? Right? Now, this isn't to say like, okay, this is how I would do this in hindsight or whatever else. As you guys know, I ended up actually with a small red day today. Now, I ended up making some of that back after my back testing. Right? But in no small part due to the two losses that I had in here, and then missing the move that I ended up calling live for everybody else. Well, two of them, actually, if we're being honest. My point isn't to talk about my trading. My point is that our execution can be off, and you guys are going to have that. And I see in a lot of conversations that I have privately that people seem to think that in order to get a payout, I need to have 8 to 10 green days in a row. Or I have to be perfect, or I can't allow myself to make mistakes, or anything like that. In fact, you guys saw me have a rough day on, I think it was last Monday actually, whichever the holiday was. Still ended up getting payouts on those Apex counts. We don't need to be perfect. We do need to put ourselves in the arena, not only in the right mindsets, that if I see my setup, man, I hope people aren't trading against me because I feel bad for them. Right? But like if I'm going, if with this live trading, it's not necessarily to show you guys executions. We would have done that back when we started the bullpen in what, June, July? The whole purpose of trading live is to show you guys two things. Real trading, consistent trading, comes with a function of resiliency. So you see many people in here that are absolutely killing it. That's the elite 3 traders that we are, right? The ones that you guys should be following strategy from. We have red days. We have difficult times. It's our ability to bounce back from it that makes us consistent. Not because we're green every single day for 250 trading days a year. It's not how this works. And there's some of you guys in here that I'm very, very excited for because you're making the jump to being real now. You're making the jump for this to be a real thing, and you've either been forced out because you're at the point where you're able to make this a full-time gig, which is exciting. And the second part is that if you're not forced out, then you're making the decision on your own. And what comes with it isn't the need to be perfect. There's going to be many things you guys are going to be able to work on. But the consistency comes knowing that you're going to take losses and have hardship. And that it's getting back into that comfort zone the next day. All that matters is the bottom line at the end. And we're trading live, not to prove to the world that we can trade live. Who cares about that? We're trading live to show that you can take losses, you can have red days, you can mess up, you can miss these banger trades. It's not the end of the world. It's not the end of the world. It hurts, especially when you're competitive. And I'm an extremely competitive person, both internally and externally. Right? But in terms of study, our strategy is about 30% of it. The other 70 is a function of resiliency, psychology, and the ability to understand what you expect the market to do. And if it's doing something other than that, you might take a loss, you might get break even, whatever. But if it's doing something opposite, you better not be trading against that long term. And I guarantee you guys, if I went and talked to the person that I was about a year and a half ago, I might have been hitting this short all day. And that would have been a very, very rough conversation with the family, right? But, yeah, narrative-wise today, very, very huge. If you guys made a decent amount of money, and I think some of you guys made a killing today, which is awesome. These are a function of patience and essentially narrative. Our structure was bullish on the higher time frame the entire day. In fact, we made one 15-minute swing. Not to be surprised inside of our 15-minute swing. Does anybody have any questions or anything from today, or particular setups or anything to go over? NQ, if you're asking me the best trade, it was the low of the day. So a certain way how to call a certain move is failing. I mean, as you improve and you're looking at this, there's no way of telling that this is going to fail to take the high or not. Right? You're not wild about this. But this in itself isn't like, it's a bit different in fairness that this happened close to the high, but even then, you've got structural reasons to lean on for this. Right? You could argue that this pullback just mitigated this area, but you can make that same argument for that. So if you're looking at failure, it's more the response that occurs, right? You see that we are failing in this. Cool. Right? We traded down. You've got some pretty good buying that came in here. And if you're right here, essentially you want to see this, or at least some form of weak bearish price action. You want that bearish response to be weak. Now, obviously, we'd rather a bullish move, right? But even then, you'd argue, well, this isn't exactly what you want to see. And that's true. That's why we lean on structure first, right? But after that, and you get this, that's your bearish response. That's your bearish response. That's a pretty good response inside of your manipulation leg. So context-wise, context-wise, this is not what you want to see, and you're kind of leaning on what you expect to see versus what there is. So whereabouts would you go long? I mean, if you're trading based off the Wombo, you're essentially long here. I actually don't know where that high is, 71. There it is. I guess in reality it should have been this. Right? So, okay, we've got our Wombo combo. We're expecting this zone to hold. We've got an objective higher. Maybe we're long somewhere in here. We've just swept all this out. Cool. Right? Maybe we're even long off this candle somewhere in here at 50. Cool. So at worst, what have we got? At worst, you've got your 23.6. That should be there. 65s. Right? If you're being very conservative, then you're essentially waiting for this to fail, in which case, seeing something violent like that, you'd probably put it to break even. And you just get taken out on this, and that's fine. Right? But in terms of anticipating whereabouts the selling should come in, and now you're looking at that response being garbage, right? Our expectation, if this was going to continue, was that this movement be violent, and instead we got a bearish candle. And if you guys look and review your charts, typically you will see things like that where you get follow through, and now you're kind of looking at this move, right? This is where we expected continuation, and we got something other than that, which means the opposite is happening. And we throw so much at you guys on a daily basis, right? And you know, the core content and everything else too, that there's just a lot to know and a lot to be aware of. That's why we do a lot of these core content sessions, like the one that'll be this week as well. We'll do another core content maybe on narrative this week. And all of it is essentially understanding what price expectations are. Right? Sometimes it gets away from us a little bit. But that's the market. That's the market. I'm going to stop the recording here as well.